Out of the 20 trillion, they estimate 1.5 will be held in real estate assets. So I think that sort of gives us some...
Hello?
Oh, thanks, Mike. That just gives us some backdrop to how important this asset class is going to be. And really what we're going to do as a group is sort of delve into what's happening globally, what's happening here in Hong Kong, and what's going to facilitate that. So I thought just to start with, we'll start with Ben as the local. I'll let everyone give them an introduction of, you know, who they are, where they're at, and where they see the opportunities.
Thank you, Andrew. So I'm Ben, CEO of RiverChain. RiverChain is a spin-off of New World Development, and what we do is we do supply chain financing for the construction sector. The construction sector is very much underserved when it comes to a post-work environment. What we've been able to do is digest alternative construction data to measure the quality of the receivables and then unleash working capital in a very simplified way. Yeah, thanks.
Hi, Anthony Woolley, so Head of Business Development at Onera. So Onera is a 4-year-old fintech, and it came together to bring the industry together to solve the problem of how do you unlock distribution at an industry level for tokenized assets. So we knew that people could tokenize assets, we knew what the technology could do, but we felt it would give rise to isolated walled gardens, for want of a better word. And if tokenization is going to deliver on its promises, you need to unlock distribution at an industry level so that potentially millions of investors can get hold of hundreds of thousands of assets and do that in a way that traditional finance understands, whether they're issuers, agents, buy-side custodians, payment providers, etc.
Yeah, my name is Tor Langoy. We have, well, traditional real estate investment firm in the US, focused on the Bay Area predominantly and Texas and Colorado. So we've done roughly $17 billion worth of investing the last 15 years or so, including our most famous development is Googleplex, which Google acquired from us in 2006. And our focus is corporate campuses in the US. And so we come from a analog world, let's say, and we're totally now embracing the digital realm of reality. And so we set up $500 million fund in Bermuda with the aim of digitalization. So we have some various partners in this conference that we're collaborating with, and this guy here is potentially one of them.
Thanks, guys. So, look, I wanted to start out sort of with your views on how big this is going to be. Today, we've probably got about $1 billion sitting in tokenized real estate, with primarily Red Swan being the largest and most well-known, and then we've seen SBI and a number of the Japanese houses do tokenized real estate. Citi's coming out with 1.5 trillion. We're sitting here in March 2024, that's 6 years. We're going from 1 billion to 1.5 trillion. Am I missing something, or is there something we should all know about from your perspectives?
Shall I pick it up? Mic 6, can you hear me? Yeah, got me. Okay, well, the first thing is you're not going to get there in a straight line, right? So, and we looked at these stats as well, you know, 2030 you're going to get here, and we're way back here. It's not going to happen unless you go through some sort of tipping point to enable this to take off. And we know, well, 3 years ago, there weren't the assets there. People knew this technology could tokenize assets, but they were really assets, real estate that couldn't get financing from banks, etc. Now we have high-quality assets, and we have issuers and banks now all with tokenization projects to distribute them, but they can't distribute them at the moment. So that's where we very much focus, is saying, well, can you give wealth managers, private banks, exchanges, our routers, we give routers to people so that they can then access those tokenized assets wherever they may be. And I think to get to that volume by 2030, you've got to unlock this market-wide infrastructure. There's no individual exchange or marketplace or institution that's going to do it on their own. So you need these, we unlock these peer-to-peer rails to help make that happen. So obviously, you know, I'm the optimist, but I feel that we can see all the projects now going to production that are going to put us on that inflection point.
Another interesting point that we have observed is that more are, from the institutional side, are coming on. So we are in that bucket that creates institutional grade product. In our case, $500 million fund. And as far as I know, we're one of the first, with a US focus at least, that's embracing that. Because many of these industries, including real estate in the US, is run by pretty traditional guys and companies who has no real interest. Many of them doesn't really have interest in digitalization. They've been sitting on the fence, they're observing, but they haven't jumped up off the fence. We're kind of the few, I think, that's been proactive. But what I'm seeing, though, there are more and more in the US and elsewhere. You can see in Dubai and elsewhere that's coming along. So I think you're going to see more corporations and developer and investors in the space that's taking the leap of digitalization, tokenization. And one of the reasons they've been sitting on the fence is because we didn't have, everybody talked about this ecosystem that has been evolving, but you guys and Tokeny and Archex and so many of our friends out there is part of this ecosystem that we now, as a asset manager, we can now utilize. And that was simply not there. Even domicile, we talked about it earlier in the speaker room, how important a good domicile was and is. So we ended up in Bermuda because they had a very clear-cut digital asset framework in place in 2018. And now, luckily, Hong Kong and others are coming on, but Bermuda for us worked out well. But I think now with the ecosystem, let's say, it's coming, it's more mature. I think more guys like us in our sector will come along and utilize this ecosystem and your services.
Yeah, and I think within that, we've got to a point where you don't want to go to there's been a demand side problem, right? You've got supply now of assets, but on the demand side, people have been trying to sell the demand side technology, and you don't want to have to do that. What you want to do is sell the demand side assets. And so that's part of unlocking that as well, and being able to get over that problem of saying, no, actually, demand side, I can have a conversation. I got this pipeline of real estate or pipeline of assets I can now unlock with you without having to try and sell them on technology first.
Yeah, and if we could kind of bring it home a little bit in Hong Kong, I mean, trying to fill the gap, right, of trying to get to that amount. I mean, Hong Kong's kind of property market, you're looking at its value at about 3.9 trillion US dollars. Obviously, quality assets here in the city. The question, and what I always go back to, tokenization of real estate in Hong Kong has always been a topic. Every year we hear about it, who's going to be kind of the first mover. And it's very much, this Venn diagram that we have to view it from. I think the public sector, the government, has been very proactive. The SFC have tokenized bonds. They launched a $100 million green bond last year. That's been doing very well, has a good pickup. And SFC has also made it now available for authorized issuers to be able to access retail investors. So on the public sector side, it's starting to embrace the ability to offer tokenization products in the market. And if you look at the investors or the so-called retail investors in Hong Kong, a lot of sophisticated investors in Hong Kong. That's the baseline. And there's a picked up of interest when you look at digital asset investments. I think there was a survey last year that was done by SCMP. 8% of people hold digital assets here in Hong Kong. And that's expected to climb to 11%. So there's going to be a demand, and that kind of, call it hockey sticking of appetite for digital assets is going to continue to grow. Now, then the question is, what about the real estate sector? And I think the real estate sector is waiting to embrace. There are developers that are playing around with Web3-ish technology to be able to pull the trigger as soon as we hit that tipping point where everyone's willing to play ball and they actually view real estate as a potential investment option that's going to fill that portfolio for this kind of group of sophisticated investors. So I think it's not going to happen overnight here. But it has the ability to kind of ride a really big wave when it's ready here. Yeah.
So there's not really a problem we're trying to solve we've got the solution. So what benefits from your individual perspectives is tokenization going to bring? What is that going to attract more investors? Is it going to make it more accessible, or is it going to streamline and drive efficiencies on how you deliver your benefits to various parties?
As for us, we give our investors the optionality of digitalization or tokenization. So giving them a digital share certificate, we see as a huge benefit. And right now, we don't really have a crazy demand for it, and we're just starting out. But what we see is in the life of the fund, which will be, in our case, 7 years, I think it's very reasonable to assume a lot of our LPs will like to exercise that optionality in terms of getting their digital share certificate, because essentially it will be a free liquidity event in the sense that you can trade between investor A and B without friction. And right now, if you're a fund manager, you will know that it's the cost of selling shares from...
Are people familiar with what the costs are of selling, existing interest in a closed-end fund? Do you want to explain? It might be worth explaining because...
Yeah, so if you're it's a huge amount of friction. So let's say you have, numerous investors in the fund. In our case, it would be dozens of investors. And let's say investor A want to sell to investor B in LP, it will take you at least a few weeks, 3 weeks to settle. And it will take you anywhere from $20,000 to a few $100,000 to do that trade. So by removing that friction and the cost by a digital share certificate, that has a huge benefit attached to it. So you can easily trade the tokens, the digital share certificate between investor A and B. That has a certain amount of benefits for sure attached to it. So that's what we're seeing. And then, of course, at some point, we expect secondary trading, whether it's our friends in Archex down the road or whoever it's going to be. But it's not unreasonable to think with the current positive trend line for digital assets that a real-world asset in an institutional-grade fund like ourselves will be traded on a regulated platform in the near future. And then obviously we'll have benefits to the LP, to our investors.
Add maybe real estate at the moment is completely offline, right? It's the world of lawyers and weeks of time and expensive transactions, etc. What we're really talking about here, because you can use buzzwords like tokenization, but it's a broader digitization of this landscape, and this is really the catalyst for it. So you had, I think many of us in this industry are guilty recently of putting quotes from Larry Fink in our presentations, because Larry Fink said the future of markets is tokenization, CEO of BlackRock. But when you listen to what he's then said after that, he said it's about creating a chain from the asset to the ultimate beneficial owner. Not just the custodian or the shareholder, but a chain from the asset to the ultimate beneficial owner. And that's what we're talking about here. It's about having assets, whether it's real estate, whatever it is. Yes, tokenize it, so you've got this record of ownership, but then creating that digital chain. If you can create that digital distribution chain in a way that finance understands, so you want investors don't need to know about the tech. They go to their wealth manager or broker-dealer or exchange and then see those assets and be able to click and become instantly a beneficial owner. Then you solve the distribution problem. Then you can bring the ticket sizes down, and then you can start to unlock secondary liquidity, which is the thing that comes last after you've done all of those other things. But that's really then what starts to turn these illiquid assets a little bit more liquid.
I have a question, actually, to Torin, actually. In your particular fund, where you have dozens of investors, are you seeing feedback provided by your investors that they do, in fact, want a digital certificate to help them mitigate or reduce their costs? Or is this something that you're just kind of projecting when you bring on new investors?
Nah, they're definitely very much aware of what's going on in the world, including with digital assets. So a lot of them they're pro crypto and they own Bitcoin privately. So they smart people. They know what's going on. But as a manager, let's say from a whether it's a family office or some of our institutional investors, they're still sitting on a fence. So they haven't jumped down from the fence. But I think it's very imminent that it's going to happen. So the trend line is very clear. Like pretty much every investor that we have interfaced with are pro digital assets, but they haven't taken the leap as an organization. But very often privately, they own crypto, even NFTs, and so the trend line is unmistaken. It's happening for sure. And I think it'd be foolish as a fund manager, like if you domicile your fund in a place, in a jurisdiction that you cannot tokenize or digitalize your fund, I think that would be poor sales strategy, let's say, because investor will surely demand it very soon. So if you have a 5-year, 7-year horizon, if you don't have that plan in as a manager, you're going to lose out.
And then maybe I could touch on, at Riverchain, kind of our approach when it comes to, tokenization, Web3. Well, we really look at more so using blockchain to, address mistrust in the property sector. And I think if you're close to the construction industry, the dynamics, it's not special to Hong Kong. You have kind of a back-to-back payment. The landlord pays the main contractor pays the subcontractor. And then you also have situations where there are long tenors. And then there's a lack of standardization because everyone's operating on a bespoke ERP system, or they're using very old school legacy systems. So what we're trying to do is actually put everything on chain, because your traditional way of doing supply chain financing might be able to look at an invoice and go find the parties that are involved in a sector. But what we've been able to do is actually pull quality information from the construction ERP systems and no longer require authentication. And we're able to assess the quality of these deals within 48 hours and deploy within 48 hours. So we're using blockchain as a way to create visibility, transparency, and trust. That's one bit, and for us to be able to deploy capital. But when it comes to actually filling an investor need, we're not there yet. We're not at a point where we can bring on retail investors. But an interesting phenomenon that we have is actually within the landlords and the main contractors that we're working with, their staff actually wants to invest into the product because it's performing better than the NPF. So we actually see that as being more so an employee-driven kind of product that could potentially be, fractionalized out for them to invest in, rather than it going out to kind of a more OTC retail, scenario at the moment.
And when you look at tokenization, is that fractionalization, democratization, how important is that, in your view, in the local market and the global market? Is that ultimately what will drive this, or what will be the catalyst for the hockey stick? Or is that going to be your own era?
Well, what I was going to say, if you look at the supply and demand, and obviously I'm more familiar with Europe and the US, coming out here from London, my accent. But the reality is today is if you take something like real estate, you've got pension funds, sovereigns, etc., that are arguably over-allocated in private markets, real estate, etc., and you've got high net worth that are potentially under-allocated, and people are trying to get greater exposure, and you can buy, say, REITs, but they don't actually give you the direct real estate exposure that you want. So when we talk about actually democratization of finance, for us, it's not a bottom-up thing, it's top-down. It's first of all trying to get assets that are currently only held by pension funds and sovereigns in the hands of ultra high net worth, and bring it down this way. And it's part of that journey, unlocking that supply and demand to make it easier for the high net worth of the world to get the direct exposure they want to the type of assets that they want exposure to. Once you do that, then it's a cascade. The ticket sizes start to come down. Then you can start to reach the mass affluent. And under suitable regulatory protection of investors, work your way further down the ecosystem. So for us, it's happening. It's that top down, I think, more than the bottom up.
Yeah, and just to segue on your point, So our minimum clip for our fund is $25 million, and that's kind of beyond the reach of most retail investors.
I can only buy one or two.
Yes, so obviously you can.
You've got a very high hurdle for a retail investor if it's 25 million as a minimum ticket.
So exactly.
Are we
so,
talking US dollars or
yeah,
pesos?
so obviously that is the beauty of tokenization. So we can take a clip, or we could take a tranche, let's say, of $20 million, and tokenize that through, well, one of the platforms, on Naira, but also, well, Tokeny and potentially on theirs, and then we can make the clip as low as $1,000 if we want to.
Yeah, I think that's what we've seen with the the launch of the ETFs. I mean, that's been that people can buy into Bitcoin at a very low amount on a platform that they're very used to, and that's really has democratized Bitcoin dramatically. Yeah, which we think is fantastic.
Yeah, and just to again bring it to the construction use case, we're looking in Hong Kong. It's about a annual 50 billion US in terms of project value in Hong Kong, and you're looking at invoices that we're acquiring anywhere between, on the low end, 50,000 US dollars to a high end that's easily in a $3 million on a per invoice basis. Of course, this is easily digestible by a family office or a private credit fund. That's very much easier for them to come in on, and we do bring these deals to them. However, when it comes to, I go back to the case, we actually have organically people going, how do I participate in your fund? And that's staff within these, property developers and the construction companies we're working with, and we're going, hey, you know what? If we were actually able to democratize it, we can have an asset pool right away to be able to acquire and bring them a return that they need. So for sure, there is the demand on that side. I don't think it's kind of widespread, but that is a use case. We do have a high quality asset that we can get more people involved that they typically do not have access to a construction sector or that exposure.
And so tokenization will give people the ability to not just invest in a buy and hold diversified portfolio like we discussed before, like New World or Hong Kong Land, but you can actually target different parts of whether that's the construction cycle, the build, the own. Is that something you see? Where do you see the opportunities across that whole life cycle of real estate, not just the buy and hold, which Tor focuses on?
Maybe I'll touch on it. If I had to kind of aspire what our platform can eventually do, is that if you get investors and so far, we identified a project that will be tokenized, and you have the ability to use Web3 solutions to do supply chain financing and create that visibility. Now you've removed all the risk of your traditional kind of construction process or the built life cycle. Right, so you have the ability to control capital that comes in on a project site and ensure that your whole supply chain of the built duration is resilient because you have that kind of access. So that is what we want to be able to do in the future, and I think that could be a potential asset class that investors would want to make sure, because of the nature of a back-to-back payment scenario, that they're investing into a good property, let's say in a hot area that to be developed.
Yeah, the other thing we're talking about, benefits of tokenization, we're talking about investors getting access and buying and selling these tokenized assets, but we haven't touched on this panel yet about collateralization, right? So if you invest in a piece of real estate, what do you want to, you've bought a piece of real estate, you may not want to sell it, it's going to trigger a tax event, so why not borrow against it right now? Why not take a lending router, an institution take a lending router from Onera and quote against that investor. So you say, I want to borrow against this real estate, you'll get quotes against it, and you can leverage it. So,
and you've got the transparency too.
And you've got the transparency, you've got the data. It's important, we haven't talked about the data about the assets the investors got access to. And then you can start to collateralize the world, and that's arguably the biggest prize that's out there.
No, I concur with all of you saying that there's definitely so many benefits going from analog to digital, and that's why we all, like from our organization, fully embrace it, because we see arguably no downside risk. It's just positive across the board. And we touched on many of these positive aspects, and the trend line is unmistaken. It's here to stay.
Yeah, and I think the thing I'm really most optimistic about, we're involved in various projects, and as an organisation, we focus very much on the largest tier one institutions, the JP Morgans, Citi Goldmans, and the State Street and Vanguard and Franklin Templeton, etc. Right, and what we see is that these projects, the last year or two, are coming out of the labs and going into production. And we know because we got our sleeves rolled up with them, and I can tell you it's about 40% technology, 60% legal and regulatory, right? But as these big first movers go into production, they're the ones that lead the way, the ones that are of a scale that can show how this works. And once you've got a pool of assets presented by somebody like a JP Morgan on a router, and then you suddenly give people a way to access those pipelines, that's the tipping point. So what we're most optimistic about is we see these projects going to production in 24. We see it coming now. We went live actually last year. I'm looking at Graham, taking like a tokenized Aberdeen money market fund, distribute it to a wealth manager who can look after their client and access it on Archax's platform. We see
Sorry
this
to
year
cut you off,
but it's happening.
we're running out of time.
Was that 10 minutes or 0 minutes?
I know people are usually quite bullish at crypto conferences. So as soon as we're out of time, can you each name one thing that you think is a hurdle that is going to be difficult to move to enable you to realise your vision?
In Hong Kong, I think it's still education. I think it's not so much just the public sector. I think the retail investors need to know what they're getting themselves into as well. So I think that's going to be the big hurdle in the city.
For me, so we don't, in the world we're in, we don't have technology hurdles, we don't have regulatory hurdles. There are supply and demand out there. The hurdle we're getting over is bootstrapping this two-sided market. It's those first movers, the first pools of supply to pools of demand, and then it will go. Yeah.
I think we actually overcome many of the hurdles. If you look back in a rearview mirror from a few years ago, let's we started. It's like domicile, for instance, regulatory frameworks, technology providers, all that is now coming into place. So we overcome most of those huge hurdles. And domicile, for instance, is ultra important for a variety of reasons. But all these huge hurdles, I think we overcome. And now it's more like finessing. Now it's more like details and customizing. Yeah. Because we have kind of the infrastructure and quote-unquote the ecosystem. And now it's really about getting momentum and creating that hockey stick and get to that $1 trillion plus.
1.5 trillion.
Which could be significantly more. Bitcoin is like $1 trillion, you know, and that was just a few years ago. Everybody thought that was a scam.
It might be more
but
today.
They don't say that anymore, so.
So thank you, guys. Much appreciated. Sorry we haven't had any chances for questions, but I'm sure all three of you are more than open to people coming up and asking them any questions in the follow-up. So yeah, just on behalf of everyone, thank you very much and appreciate Anthony and Tor making the journey out here from the UK and Ben making the journey from a few floors above. So thank you, everyone. And